Last video I promised that we'd cover debits and credits, and that's exactly what we're going to be doing in this presentation. So debits and credits are incredibly important, probably the most important facet of financial accounting, and that's because everything regarding transactions and reporting have to do with debits and credits. So if there is one presentation you really focus in on, it is this presentation. And I know it's sometimes difficult because my voice is so relaxing, obviously, that you might tunnel vision at times, but if you really stay attentive during this presentation, I swear that it is going to pay off big time during tests, because a lot of marks are earned through transaction analysis, which is revolving around debits and credits. So the first thing I wanted to say is that in the last presentation I said that every transaction is going to have at least one credit and one debit. So it is incredibly important to understand how these debit and credits work, because debits and credits are going to actually increase and decrease certain accounts, and if you don't understand how debits and credits work, then you might increase or decrease the wrong accounts. You might mix up certain numbers, and it could create a bunch of havoc within financial preparation and you preparing the statements. The next thing I wanted to cover is that there's this misconception with people who start off in financial accounting, and that is everyday life. Normally you go to the bank, you'll see on your statement when you go in an ATM that a debit usually means a decrease of cash within your account, and a credit usually means an increase. But within financial accounting context, this is not what it means. So if I were to say that I'm debiting cash, and DR is just abbreviated for debit and CR for credit. If I'm debiting cash and crediting revenue, this does not mean that I'm decreasing cash and increasing the amount of revenue I have in those accounts. Okay, so debits and credits, this is not what they mean. There is actually a specific rule within financial accounting for what debits and credits are, which we're going to learn about in the next few seconds. So to actually learn what debits and credits do, we're going to look at the fundamental accounting equations. So let's break that beauty out. Assets equals liabilities plus shareholders' equity, sometimes known as just equity or owner's equity. And within each of these elements, these are three different elements, there are numerous different accounts like cash, accounts receivable, inventory within assets, liabilities. We have a bunch of payables, equity, we have common shares, retained earnings. So there's many different accounts within each of these elements. And all of these elements are going to fluctuate, right? We're not going to have the same amount of cash. We're not going to have the same amount of receivables. All of these accounts are going to change. How are they going to change? Well, that's where the debits and credits come in, because debits and credits are actually the system of increasing and decreasing the balances of accounts. So the first thing I wanted to actually bring forth is this little rule, which is the rule to financial accounting. I'm just going to kind of clean this up a bit. I've got a lot of stuff going on here. And that is debits, what debits are going to do is they're going to increase all of the left side. This AI just means accounting, or I should say AE, my bad, accounting equation accounts. So just picture all of these are AE. AE. So debits are going to increase all of the left side accounting equation accounts. So this is the accounting equation. Everything on the left side, so this is the left, I should actually put that in pink. Everything on the left, this is the left side, which is assets, and the right side is liabilities and equity. So if I were to debit any of the left side accounts, which are like cash and receivables, which are all assets, I would be increasing the balance in those accounts. If I were to debit any of the right side accounts like a liability or an equity account, I would be decreasing the balance in that account. For credits, I'm going to be increasing all of the right side accounts. So if I credit maybe a payable, I would be increasing the balance of that payable account. So it's exactly the opposite. Debits increase all the accounts on the left side, while credits increase everything on the right side. So let's see if we understand that really quickly. Let me just get rid of that, move this up. So if I were to look at an example really quickly, let's say that we have a transaction. We purchase a piece of equipment on account. So the first thing I'm going to look at is what's going on here. So we purchase a piece of equipment, so this is an asset that we're gaining, and we are also purchasing it on account, which if we're not paying cash, it would be an accounts payable, and accounts payable means we owe someone money, and according to our definition of a liability, that's what a liability is. So since we are creating a payable, we are actually going to be increasing our liabilities because we owe someone money. So our asset is going to be equipment, the account, and our liability account is going to be accounts payable. So since we're increasing equipment, which is an asset, we look at this rule right here, which is the rule for debits and credits. Since we're increasing asset is a left side accounting equation account. So since we're increasing it, we would be debiting equipment. So we would debit equipment, and since we're increasing a liability, which is accounts payable is a liability. It's on the right side, and since we're increasing a right side account, we would credit accounts payable. So you see right there, we have one debit, we have one credit. This is a valid transaction, and we're finished with that one transaction. So that's exactly how we have we've increased the balance in both the equipment account and the accounts payable account. So I know this tutorial has gotten a little bit lengthy. I'm going to actually create another debits and credits tutorial to further continue anything we're talking about within here. Hope you got the basics of how debits and credits work. We'll talk more about it in the next tutorial. See you guys then. I'm sure you guys have questions regarding the accounting topics or our videos, so make sure to tweet us at #iNinjaNotes, like us on Facebook to receive updates, or to share any quick anecdotes about how our videos might have helped. And like always, thanks for watching us on YouTube.